so far, and I hope you're doing well. What's my largest holding? Great question, Errol. Errol's so smart. I love talking to Errol. Errol, you're one of my favorite people. Period. I just want you to know that. Um, that you know what? I'm not 100% sure, but I believe it's Amazon. I got to double check, but I think Amazon is where I have my biggest holding. I gotta look. I can't remember. I buy so much stuff. I don't always remember everything that represents my biggest holdings. But then again, it's a style, it's a preference, right? Some people invest in a way where they know exactly what they hold in every area all the time. What I do is I look for evidence that tells me that there's a possible catalyst that could push a stock price up, and I add good stocks to my portfolio. And in fact, in a little bit, I'll give you guys a couple of stocks that I identified that I like that I bought. I just bought shares of these companies, and that can kind of help you guys. Also, if you are interested in weed, in what's going on with the weed industry, not smoking weed. I'm not going to smoke with you, but I will invest with you. I want you smoking. I want you to be smoking the kind of weed where you make your weed out of the dollar bills. You crush your dollar bills up and you smoke them. I'm joking. I'm being stupid. But anyway, that's what I'll smoke with you. And so I have a list of cannabis stocks that I pulled together. That if you did not get that list yet, let me know if you all got the list. I sent it out via text. And what I'll do is I'm going to grab the link again today and put that back in the chat so you guys can have that list of cannabis stocks. And y'all got to forgive me. I'm looking all over my computer screen. I got stuff everywhere. But yeah, I call them canna stocks. That's because I just make names up and stuff. But yeah, so the list of canna stocks, it's in here somewhere. I'm going to find it. And when I find it, I'm going to share it. Don't let me forget to share it because in the mornings when I have all my stuff out everywhere, sometimes I get a little bit lost with stuff. All right, so with that being said, and the reason that I'm really interested in cannabis is because I just really believe it's going to be legalized. I don't think that the world we live in now can persist. I think that when you talk about cannabis and crypto, those are just two areas where there's too much legal ambiguity, and so I think that there will be more clarity, regulatory clarity when it comes to crypto, which will benefit a lot of cryptos. In fact, right now, there's an Ethereum ETF that is pretty much approved or close to it. And I think that that's a good reason to be invested with Ethereum. Also with Bitcoin, we've been talking about Bitcoin for a while, and I mentioned to you all that I'm a big fan of Bitcoin. And so there's a lot of opportunities out here. And so let me share this list of the cannabis stocks. I'm gonna put it in the chat, and you guys can grab that if that's of interest to you. Give me 1 second here. Hold on. All right, let's see. Here we go. Okay. Sheesh, I tell you, it's like there's so much information to keep up with. It's kind of hard to. Okay. Oh, there we go. Okay. Well, thank you, Sonia. Sonia already shared it, so looks like Sonia's on her game. What would I do without Sonia? All right. So anyway, so there's the list right there inside the chat as well. So Sonia also provides her link as well. So let's see here. What else am I noticing? All right. So in terms of opportunities, I do believe that, and I heard an analysis by Kathy Wood, who is interesting. She's super smart, but sometimes she's just wrong. And I don't know if she's wrong about this or not, but I know that it did make sense. She was saying that based on certain historical data, that there's evidence to say that companies that small cap stocks tend to do well in this kind of environment. They don't do well right now, like they're undervalued. And that what's happening right now in the market is that everybody's flocking toward these big companies, these big tech companies. And what tends to happen is that whatever everybody else is flocking toward, that's not really the place you want to be long term. Like everything that's overperforming right now is going to underperform at some point in the near future, and everything that's underperforming now is going to do well later on. So there are some small cap companies that I took a look at that I actually invested in. And again, this is not investing advice, but I'll mention them to you. One is a company called Magnite, Magnite, and the ticker symbol is MGNI. And I invested in this company solely for the fact that when I did my research on it, the analysts like it, and also it's a small cap company that should have some possibilities later on down the line as the market evolves. So again, if you want to go take a look at that company, it's MGMI, and the name of the company is Magnite. And so feel free to take a look at that. Again, this is not investing advice, though. Now, what else is happening in the markets? I'll just kind of give you a quick summary. A couple of things going on right now. Basically, the economy is holding pretty steady. There are some risks and catalysts in the economy, particularly in the areas like commercial real estate. A lot of people are concerned about commercial real estate. In addition to that, if you want to look at sectors that seem to be a little bit overvalued, tech is a little overvalued. So all the big tech stocks that everybody loves, a lot of people believe that they're priced so high that even though these are great companies, they may not be great investments. Because remember, a great company does not make for a great investment, and a bad company does not mean it's a bad investment. Also, the Federal Reserve is expected to maintain interest rates higher for longer, which means that these rate cuts that they've been talking about that would have been positive catalysts for your stocks, they're probably not coming for a while. They may do a rate cut in the summer, but for the most part, they're not going to likely do the rate cuts that everyone expected to see, right? And also, some people believe that GDP is going to slow down a little bit in the third quarter of 2024. They're not predicting a recession, but there could be. I mean, they're supposed to be. The economy's done so well that at some point you've got to slow down. You've got, that which goes up has to eventually come down. And so you can expect some sort of economic downturn to occur in the near future. All right. So what I want to do is look at some of your questions here. Let's see. The first question I see comes from Genia Ardrey. She says, I have P&G stock with a holding company. Should I leave it there or move it to another platform to build in order to buy, sell options? Well, if you're talking about buying and selling options, Procter & Gamble is not a stock that we talk about much in the Prime program. Right? So, in terms of options, you'd have to have a lot of shares of Procter & Gamble stock, I expect, to be able to generate a decent income from options. However, if you wanted to move assets over to pursue a particular strategy, you can. But what I do is I sell my options and stuff like that, and that's how I generate my income. But I don't put more than, say, 20%, 15, 20% of my portfolio in that direction. Because you got to remember that every type of investment involves risk. The stocks that give you the most income tend to also have the most volatility. That's why the options market is so active. So in my view, I wouldn't sort of get overly enthusiastic when you see the money come out. I mean, it can be nice though, if you're able to kind of stomach it and just kind of ignore the things that should be ignored. Then it does work. I sat with a student this morning who every week he generates about $3,000 a week on his options. And but he was a saver. He saved up over $100,000, and so he's able to put that money in that portfolio and just use that as his income driver. So he doesn't have to work if he doesn't want to. So this is an easy out. And those that are interested, if you don't know about the Prime program, a lot of people like it. So feel free to go to drboyceprime.com if you want to take a look at that. It's a really great way to make money. Let's see. Jennifer says, did Dr. Boyce host a private Q&A for Prime members this morning at 10 a.m. Central? No, I did not. Was that, did that pop up on the schedule or something? Did you get a notification or something? Because sometimes Zoom does weird stuff like that. It'll send out stuff announcing that I'm going to do something and I know nothing about it. So if that happens, we've got a great support team. You can email support@theblackbusinessschool.com and they will take care of you. They'll make sure that, that everything that should be a certain way is done a certain way. So email support@theblackbusinessschool.com if you see anything like that, because sometimes I don't catch everything, and so I would love your help in terms of figuring out how we can do things better in the Black Business School. I keep trying to help everybody understand that we are a university, right? A lot of people don't believe a Black man can actually run a university, but my PhD is just as real as the white guys. So we are getting it done, and we educate. We educate people on Black wealth better than any institution in the country. There's no HBCU, there's no white university, Harvard, Yale, Stanford. None of these schools do what we do the way we do it because we are kind of the Black wealth surgeon. So that's our specialty. That's what we selected, and that's where we're going to stay, right? So if you want to see how we can help you, just email the support team, support@theblackbusinessschool.com. Thank you, Rianne, by the way. I see you in the chat. Rianne is on our team. She's in the chat right now. She can answer questions and help you out. And the ticker symbol for the stock I mentioned earlier is MGNI. MGMI, I just bought shares of that stock this morning, and this is how I want you to get into the habit of buying stock. I want you to not make it a big deal. Don't overthink it. Just get in there and buy consistently. And when you see stocks that appear to be good opportunities, just buy it. Just do it. You know, just like you go to the store and you buy bread, or you go and you buy a pair of socks. When you buy a pair of socks, you don't sit and spend 6 weeks wondering if you should own socks or not. You just do it. So buy stocks the way you buy socks. Man, look at me. I got bars today. So buy stocks the way you buy socks. And that is literally my best advice for you and I don't give it investing advice. So let me just take that word back, but you get what I'm saying, that this is how I do it. Just you find stuff that you think is a good buy and you invest it. Because here's the deal. Look, Magnite, the company I mentioned earlier, they provide technology solutions to automate the purchase and sale of digital advertising inventory for buyers and sellers. It features applications and services for digital advertising sellers, including websites, mobile applications, and other digital media properties. Okay, so Magnite, the ticker symbol is MGNI, Mary, Gary, Nancy, Ignition. Basically, think about this. So this stock is $12.60. Okay, now here's the thing. I'm going to tell you right now that I bought this stock this morning. I bought a couple $1,000s worth of this stock. If you ask me 2 months from now, hey Boyce, do you own Magnite? Did you buy any shares of Magnite? I won't remember. I'm going to literally be like, I don't know. Let me check, because I buy anything that looks good. And here's why I don't overthink it, why I don't let it stress me out. So let's say that you buy a few shares of the stock, and let's say that it doesn't go up at all. Let's say that it drops by 40%. Well, what else were you going to do with that money anyway? I mean, maybe you could have bought a different stock, but you don't know. You can't predict stock prices. There's a whole theory called the random walk hypothesis, and I've told you all about this, that says you really can't predict what a stock is going to do. You can make a guess. You can kind of look at sectors and kind of figure some things out, figure out what the risk profile is, but you really don't know. You don't know. So stop trying to know things that you can't know. And stop listening to people who tell you they know things that are really unknowable. This again, I'm not a financial influencer. I am a financial scientist. So I can tell you that the financial science, the research says you can't predict. So stop stressing yourself over things that you can't control and things you can't possibly know. Here's what you do know, though. You lean on what you do know. Here's what you do know is that people who consistently buy stock have more money than people who don't buy stock. Do we agree on that? Give me a yes if I've convinced you of that, if you understand this, if you believe me. This is what the research says. Again, I'm not a financial influencer, I'm a financial scientist. This is what the science says. That's what you do know. So, and what else do you know? Well, you do know that if you save all your money or put it into some sort of asset, you're going to have more to show for it than if you take it to the mall and buy a bunch of clothes. Do we agree on that? That if I buy this stock at $12.60 per share, and I put my money in this stock, even if the stock goes south 5 years from now, and let's say it drops from $12.60 to $9 a share, at least I'll still have some money left over. What happens if I go to the mall with that money? And this is the thing. People will avoid investing because they're scared of losing a little bit of money, but will go take that same money and go shopping, which means you're going to lose all your damn money. There ain't hardly nothing you bought in 2017 that you're still using right now. Probably not even your car. So why not try? And here's the third thing. Here's another thing you do know. I can name 20 things that you do know, and then I can name a bunch of stuff you don't know. But here's another thing that you do know. You do know that keeping your money is better than giving it away, right? We do know these things, right? We do know that if I keep my money, I'm going to have more money than if I give my money away. So when you buy stock, what you're really doing is you're putting your money into what they call a store of value. A store of value is like putting my money in a bucket. And if I put my money in a bucket, another thing I know, this is another thing you add to the list, is I know that if I buy this stock, sure, it might go down. But also if I buy this stock, it might go up. And I know that I don't know if it's going to go up, but at least I know that if I'm in the game, I have a chance to win. If I'm not in the game at all, I have no chance at all. So I buy this stock not because I know it's going to go up, but because I have a reason to believe that there's a good chance it could go up. I also know that if I save my money, I'm going to have more than if I give my money away. And then also I know that this stock might double or triple or something. And then because I'm in the game, that's how you win the game. Do you understand? Like when I show you all this stuff, let me show you. This is exciting. I saw INSM, and it's fun. Investing, the fun side of investing, it's okay to have fun, is when you get these like Christmases in July kind of thing, or these like really exciting surprises. So let me show you the big surprise for today that really just is going to make my wife want to give me extra kisses today on her birthday. Today's her birthday, and I love my wife a lot, and she's just sexy as hell. She's 50 years old. She wears the same size she wore in college. How about that for a miracle? And she ain't on Ozempic, and she don't smoke crack or nothing. So she actually did it the right way. She actually went to the gym and busted her butt. So shout out to all the hardworking Black women in the world. You deserve the best of us. So here's what happened today that is going to make my wife give me extra kisses when she wakes up. Look at this stock. This is INSMED. The ticker symbol is INSM. It's a pharmaceutical company. I bought these shares because I felt that there was some possibility this stock would go up. It was what I call a pregnant stock. And by pregnant, I mean that the number one driver of stock prices is information. Information is everything. That's why Martha Stewart is doing TV shows with Snoop Dogg, because she traded on inside information. And y'all remember what happened to Martha Stewart? Does everybody know that? Let me know if you remember what happened to Martha Stewart. Martha Stewart went to prison because she traded on inside information. And basically the idea is that to maintain fair and orderly markets, you have to make sure everybody has the same information, so that when that information gets released, it moves prices. And it's not fair if somebody knows what's going to happen before it actually happens. So here, with this stock, based on the volatility characteristics of this stock, I said, okay, I don't know if this stock is going to give birth to a boy or a girl. I don't know if it's going to give birth to a pretty baby or an ugly baby, but you can look at the options activity of a stock and figure out if that stock is pregnant. So INSMED was a stock I pointed out because it looked pregnant. I sold some call options on the stock, made a few $1,000s on that, but I gave up a lot of my upside, and the stock just did a kapoof, right? It went from $22 or something to $46.82, and it doubled in price overnight, pretty much. And this happened. Now, did I know this was going to occur? No, I did not. It's not. I'm not going to sit here and pretend to be some sort of financial magician that can predict these things. You can't predict these things, but because if it was predictable, the stock wouldn't have been trading at 22, it would have been trading at 46 all along. But I knew there was a chance, and I knew that in order to get a chance to win, you have to be in the game. So I quietly, sort of slowly, consistently bought shares of this stock. And I did mention it to you guys. I mentioned the stock to you. And actually, I think in the moneymakers list, or actually, I sent something out to you guys on Prime about this. So here with this stock, it's up here. Now, here's what I did at this point. What I did now was, because of my particular style of investing, my goal is to not be greedy. I don't need to make every single nickel. I'd rather protect a dollar than risk a dollar to go try to make a dollar, especially when I'm already way ahead. So just like a basketball game, if you notice, a basketball coach plays a different strategy when he's winning than he does when he's losing. So because I'm the coach that's 30 points ahead in the game, I'm not trying to shoot a lot of 3-pointers. I'm not trying to get 60 points ahead. I want to protect the lead. So, but at the same time, I want that upside. I want it just in case the stock keeps on running. I want to be a part of that. I want to still be in the game so I can have a chance to win. So what I did was I was going to sell some call options on the stock at this price, but the stock moved so much that when I looked for the price of the calls, there was no market for the calls on the stock. Now that might have changed, but when I looked this morning, I literally looked. The current price is $46.74. From what I understand, yeah, you can't, at least not on Robinhood anyway. Maybe on the other apps it's different, but you can't sell a call option on this stock with a strike price above 40, which is just interesting to me because I'm curious to see when that's going to change. The other thing that I did was I didn't buy puts, but what I did a trailing stop loss order. I sold a little bit of my position just to get out, and then I did a trailing stop loss, and that basically means that I gave instructions that say that if this stock keeps going up, then keep holding it. But if it drops 10% above its previous high, get me out. I'm out. I don't want to keep losing money because there's nothing that's really connecting me to this company. There's no reason that I see to want to be a long-term investor. I've done well. I'm happy. I want to put my money into other stable securities. Also, with the market being so strong, I'm stockpiling cash because I told you guys, as I always tell you, winter is coming. Winter is coming. Sunny days don't last forever. Winter is coming. There's going to come a day where you're going to start seeing a change in the headlines. You're going to start seeing all these announcements that the market is going south and it drops again. The Dow has the biggest drop, 2-day drop in history, whatever. You're going to see that bad news. But the good news about bad news is that bad news really ain't bad news unless you want it to be bad. The good news about the bad news is that bad news can actually be good. So it can be bad, not bad meaning bad, but bad meaning good. Shout out to Run DMC. So basically, when you start seeing those negative headlines, if you are prepared and you have the cash available, then you can go ahead and take advantage of those opportunities because there are people like the Warren Buffetts of the world who just sit back and they stockpile cash. They're just loading up the gun. They're just loading up the gunpowder, putting the bullets in the holster. Or, well, you know what I mean. Don't put bullets in a holster, but you get the point. And they're just kind of getting ready. They're ready to cock and squeeze whenever the market dips. Warren Buffett's sitting on $170 billion in cash, and he's not using it because he doesn't see anything worth buying. But I guarantee you that if the market starts to dip, you're going to see Warren Buffett make some major acquisitions. Now, here's one thing I wanted to mention. I see your question, Anthony, on doing a class on how to do trailing stops. There is one training I did. I did that class. I did a special training on that, and I called it Stormproof Investing. And so if you go to stormproofinvesting.com, stormproofinvesting.com is a training. It doesn't cost that much, and it's yours for life. And I literally went through 6 or 7 different strategies that you can follow to prepare yourself for an economic storm. And so the trailing stop was part of it, but then there's other strategies that we lay out. So feel free to go to stormproofinvesting.com. And not only do we allow you to share anything that you do in the Black Business School with your family, you can share your membership with other people in your family. Just try to be respectful if you can of what we're doing. And not only do we allow you, but we encourage you to do that. So each one teach one. So feel free to do that. Do you do contract trading? You mean for stock options? If that's the case, then yeah, that's drboyceprime.com. So feel free to go to drboyceprime.com. Or if you want an introduction, you can text the word money to 87948. And I have a training called How to Make Money Without Working. It really does work. It's very effective. And so if you want to take a look at that, you can just text the word money to the number 87948. Now, one of the company I want to show you that was really interesting too. Just this one gives me, this is like, sometimes you think about an old girlfriend and you kind of smile to yourself, but I don't do that too often because I'm married now, so I'm a good boy. But still, this stock is like a beautiful old girlfriend or something from 20 years ago, and it's Madrigal Pharmaceuticals. And let me show you this. This happened in class. This is pretty cool. This stock was trading about 60 something, and one of the students in the prime class came to me. James Wilson was actually teaching his whole entire church how to trade stock options, which not trade stock options, but generate income from stock options. It's very different from trading. There will be 3 categories of investing, in my opinion. There are long-term investors, there are traders, which it's very stressful, very tough to make consistent income. And then there are income generators. Income generators are more on the conservative side. You're not buying risk, you're selling risk. So he's teaching his whole church how to increase their income with stock options, because you have all these people in the church that have, that $40, $50, $80,000 or whatever in home equity or in their 401k, and they want to activate some of that money and generate income from it. Maybe they want to quit their job. And so he's showing the whole church how to do it. And I just love that. So anyway, James came to me with this company and he saw that the options premiums were really high. And I said, okay, so you got a pregnant stock on your hands. Something big is about to happen. So what I did with this stock was I bought a bunch of shares. I not only told them that I like it, but if I like something, I'll invest right along with you, right? I'm in the same game you are. So I bought a bunch of the shares. I sold options on some of the shares, but I didn't sell the options on all the shares because I said, if this stock does take off, I want to be a part of that. I want to be a part of the party. So this stock literally went from $67 per share up to $290, and it did that like overnight, just like that. And so it was like Christmas in July. I don't know how much money James and his wife made, but I'm willing to bet you it was quite a bit because it was how they were positioned. But I don't mean to talk about anybody's personal business. And I made some money too. And so sometimes these things happen. But the thing about it, though, in my opinion, is that in terms of investing strategy, you don't want to think of the market as a casino. Some people, sorry, the company's Madrigal Pharmaceuticals. Good question, Stephanie. You don't want to think of the market as a casino. You know, a lot of people sort of invest where they're hoping to hit it big, almost with a lottery kind of mindset. And I don't think that that's a healthy way to invest because you usually don't hit it big like that. And then sometimes you can hit it bad. And really, the reason we created a whole department called Black Financial Therapy is because sometimes when we hit it bad, we don't know how to handle that. And so, really, I want to encourage you all to make sure that you understand that emotions are a big part of investing. You know, you can feel the euphoria when you make money, but euphoria is very dangerous. Euphoria can get you in trouble. So, even when I made this money today, my first thought was, wow, all right, this is awesome. Then my next thought was, okay, calm down, boys. Let's protect what we have. Because once you get wealth, remember, I've mentioned to you all the 4 steps of wealth, right? Let's go through that really quickly. Number one is you have to know where the wealth is located. That's financial consciousness. We do financial consciousness training every morning at 10 a.m. Eastern because a lot of people, they'll never be the money because they can't see the money. They don't know where the money is. Money can literally walk right past them and they will literally wave at it and go in the other direction. So how are you ever going to have the money if you don't understand the money, if you don't know where the money is, you don't know why some people get wealthy and some people don't? That is an awareness that you have to have. And if you ever want to be wealthy, and you'd be amazed how many people talk about, I want to make money, get money, ride or die for money, you know, money over bros and hoes. And, you know, like I die for money. I love money. Well, if you love money so much, then why don't you understand it? Why aren't you studying money? You should be studying the thing that you love. I love my wife. I study my wife. I watch her. I pay attention to what she likes, what she doesn't like. I understand who she is as a person. So the things you love are the things you're going to study. So if you ain't studying money, then you really don't like money the way you say you do. You don't really want financial security. You just want to talk about it. It just sounds good, right? Just like I would talk about wanting to lose weight, but I didn't really want to lose weight because I didn't go to the gym. So that's the first thing is consciousness, awareness, knowing where the money's at. Then once you know where the money is, then you have to have a plan. You know, you got to make a little strategy, lay out the plan. What's the plan to go get the money? How are we going to connect ourselves to the money? The third thing you got to do is you got to execute. You have to follow through on the plan. So you know where the money's at. You made a plan to get the money. Now you got to get up and do the work. You know, so again, we talked this morning in financial consciousness about level 1 versus level 2. A lot of people, most people are at level 1. Level 1 means everything is one day. One day I'm going to do this. One day I'm going to do that. One day I'm going to have money. One day I'm going to be successful. One day I'm going to work hard. One day I'm going to lose weight. But to me, my question is not what are you going to do one day? My question is what are you going to do today? Level 2. You know, so today I'm going to invest. Today I'm going to learn. Today I'm going to go to the gym. Today I'm going to execute my plan. Right. So so that execution is really, really important. Critical. Put that on your list. Number 4, fourth step in wealth building is once you have done those first 3 steps, you will probably be wealthy. Once you have economic awareness, you've made a plan, and you've executed the plan and you've allowed time to grow your wealth because when you are executing the plan, you're planting little seeds. And when you plant seeds and you let them grow, they grow into big sycamore trees. So now you're sitting on money, you're sitting on success, you're sitting on all these things. Well, the fourth thing you have to do is you must protect that. You must protect that because remember, especially when you're Black, this is really true when you're Black. You know, I hate to say it, but it's true. When you get money, you're sitting in the middle of a space sometimes where nobody has money except for you, where most people don't have the success you have. They don't have the prosperity you have. They're not doing as well as you, right? You know what I mean? And so what happens is you kind of end up becoming vulnerable to those who want what you got. You know, when I started making money, and I was a single man, I suddenly became very handsome. I didn't know how handsome I was until I had money. My jokes were funnier. I was the most interesting man in the world. I got attention from women that didn't pay me any attention when I was a broke student in grad school, and that was new. I didn't know. I was like, I'm the same guy. Why am I being treated so different? This is weird. You know, but now as I read books about it, it's natural. It happens, right? So same thing happens with when you have money, you get more friends. Everybody wants to be friends with the rich guy, right? And so what I would say to you is that protection of the wealth, it really sticks out in a lot of different ways. And I'm not going to go through all the different ways because it would take all day. Because remember, I spent a lot of time studying risk management, which is basically an awareness of all the vulnerabilities and threats that exist around you. That's what that is. And I studied risk management under a guy named Renee Stoltz, who is probably one of the top 3 leading experts on the planet in risk management. He would travel all around the world and teach banks how to manage their risk. Right. So I edited a textbook for him when I was in graduate school. So I spent a lot of time thinking about risk and vulnerability and how to protect yourself. And that there's a long list of ways you have to sort of know how to protect what you have, because if you don't protect your wealth, you're going to lose it. 70% of all wealthy families lose all their wealth in one generation. 90% of all wealthy families lose all their wealth in 2 generations. So why in the hell would you work your ass off for 20, 30 years, bust your butt, grind into the ground to build all this wealth, and then you hand it to your kids and they just literally take the ball and throw it out of bounds, like a basketball game. You work really hard to get the ball down the court and you pass it to your teammate and they throw the ball out of bounds. Or you are a football team and you work really hard and you grind it to run the offense and get all the way down to the 18-yard line, and you set the kicker up for a great field goal and he just kicks it he goes wide right. Like, that's got to just make these guys so mad because they work so hard to get to that point. And that's what I see when I see families that work hard and grind and push and do everything you got to do. You make a plan, you execute the plan, and then you pass the ball to your kids, and your kids are not trained to protect the ball, so you lose everything. So in this case, that doesn't just exist on a macro level, it exists on a micro level. So on a micro level, when I had this win, when the stock doubled overnight, I'm like, woohoo, this is great. My next thought was, how do I protect this? How do I protect this? And that's when you go into defense mode. Now I went from playing offense. We got down the field. Now we're going to play some defense. So you got to defend your positions. And so what I would encourage you to do is this. Right now, the market's doing really well. Right now, it's raining money in the stock market. And if you've missed this, I feel bad. I hate that. I hope I can convince you to go take a look, because the money is everywhere. But it ain't going to always be everywhere. Winter is coming. Bad things are going to happen. So what you do is you buy your umbrellas when the sun is out. You never buy umbrellas in the rain, because when the rain comes down, everybody's buying umbrellas. So the price of umbrellas goes way up. So you buy your umbrellas in the sun. So when I'm in the middle of the sun and I'm feeling good about this win, first thing I do is try to protect that win by shaving some shares off the top, maybe looking at some put options, maybe some stop loss orders, all that other stuff. Okay. So again, if you want to take a look at that training where we spent the whole day going through that, it's free. Well, it's not free. I'm sorry. It's a very low cost and it's yours for life though. Just go to stormproofinvesting.com. That's stormproofinvesting.com and share it with your whole family. You don't have to just, it's not just yours. It's anybody in your family you want to share it with. Also, someone was asking about the options training. Yeah. If you go to drboyceprime.com, that'll get you there. So Rianne, I see someone mentioned that the links aren't working. Can you talk to that student for me, Rianne? So I see Rianne also put text the word money to 87948 for the training. So it's about an hour-long presentation I did on how to make money without working. I know you're gonna like it. So feel free to text the word money to 87948, and you can also go to drboyceprime.com. Okay, I think you're in there. Is Rianne, are you still in there? I assume Rianne is in there. So let's see here. Okay, thank you, Rianne. Yeah, it looks like Kevin has a question too. So maybe y'all can even talk offline or get an email address and share information that way too. So help each other out. All right, so let's answer some more questions here. Kevin says, is the method that Boyce uses to pick his stocks, which he presents in Stock Market Tuesdays, more oriented toward fundamental analysis or technical analysis? You know what, Kevin, I use fundamental analysis. Technical analysis is not really so encouraged amongst financial scientists. If you go to academic finance, when I was working on my doctorate, if I'd said that I believe in technical analysis, there's a good chance I might have got kicked out of my program. But there are some caveats to that. There are some exceptions for sure. There are some areas of technical analysis that actually do hold true. Which technical analysis, in case you all don't know, it's kind of like when you're looking at charts and you're looking at these bands of trading and and resistance levels and stuff like that. And I'm just going to tell you, if you went to MIT, with some of the best financial scientists on the planet, and you said that's how I trade stocks, there's a good chance that a lot of them would not take that seriously. But I don't think that that's completely accurate. Just because that's what they believe doesn't mean that's 100% true. Part of my dissertation was actually on a type of technical analysis that focused on reversals and momentum. So sometimes it makes sense if you think about how human beings operate. It kind of means, when the prices go up, there's a good chance they're going to kind of get pulled down because people take their wins and they make adjustments, they sell their shares and stuff like that. And so, yeah. But I'm more of a fundamental analysis person. And really fundamental analysis long term, in my opinion, is more effective as an investing strategy for one basic reason. It's very rare that you're going to find a good company with good fundamentals that knows how to make money, where that investment in that company isn't going to lead you to make more money over the long term. If you look at almost any company that has growing revenues, growing net income, growing market share, just a good, solid, quality business, quality management, all that, and you invest in that company over, say, a 5 or 10 year period, you're usually not going to lose, right? And definitely not if you do it in a portfolio, right? Most investing really should be done in a portfolio. You should not be, according to financial science, you should not be focused on any individual stock. Okay. So I don't really get caught up in individual stocks. I look at them as collectives, as groups. So that style of looking at stocks, that fundamental analysis, is consistent with how Warren Buffett invests. If you listen to Warren Buffett talk, which I think everybody should, I like that guy a lot. He's accumulated his $200 billion in cash pretty much by investing in quality businesses. He's not into the technical analysis, none of that. He just tries to figure out, do you have good management? Do you have good product? Do your customers like you? Is your revenue growing? Your income growing? That kind of thing. That's what Buffett does, and it works. And why? Well, because Buffett is a buy and hold investor. He's not a trader, right? But that doesn't mean he knows everything, though. There's been many occasions where he's missed out on lots of money because he didn't try to time the market, or he didn't participate in a market frenzy or whatever. So Buffett ain't perfect, but I like Buffett's style because it's solid. It's conservative. He learned how to invest from a book by two people named Graham and Dodd called Value Investing, that was written like literally in 1932 or 33. But him and Charlie Munger are pretty old, so they were probably teenagers or something. I guess for them, that was the hot, hip, cool new book that was out there. Okay, so has Boyce bought anything so far? Yeah, MGMNI. There we go. Thank you, Joni and Margaret. Okay, there we go. So yeah, it's MGNI. That was the stock I mentioned earlier. There's another stock that I actually bought today. Let me see here. What was the ticker symbol was RCKT, and it was a pharmaceuticals company. Let me see. I'm going to read about the company and tell you guys more about it. Okay. And these are more long-term investments. So just so you know, these are investments that I believe will do well in the next, 5 to 10 years. I'm not talking about stuff that's going to do well tomorrow. Okay. So let's not get caught up in that casino mindset. So yeah, Rocket Pharmaceuticals, it's a clinical stage biotech company which engages in the development of gene therapy treatment options for rare and devastating pediatric diseases. So just based on my research, that's a company I decided I want to take some ownership in. So there we go. All right. So let me answer more questions. And by the way, that list of cannabis stocks that I mentioned, or I call them canna stocks because you say that other word too much. I don't know, if I put it in an email or something, they'll think I'm selling drugs. I like those canna stocks. I'll share that link again for those of you that didn't get it. I can't even find the freaking link. Just get on the text list. Make sure you're on the text list. Text the word morning to 87948. Or you can also email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com, and they can get you the list because I can't. I got too many screens open and I'm confusing myself. So, all right. So yeah, and I know y'all didn't come here to listen to me be confused. Okay. So Jennifer says, what are the pros and cons of using margin to buy stocks? The pros of margin, Jennifer, is that margin is debt. Debt is an economic accelerator. Debt is something that will push you faster in whichever direction you're going. So if you're going in a good direction, debt will make more good things happen for you. If you're going in a bad direction, debt will accelerate the pain and the badness of your situation. So debt is like driving a super fast car, and it's going to get you to your destination faster. But if you drive it sloppily, it can crash and get you killed. So I'm a fan of debt, especially if it's used responsibly. Most millionaires and billionaires have used debt to get to where they are. If Elon Musk did not have access to debt, then he would not be the guy that he is right now. He would not be the billionaire that he is today. So debt can be a good thing. Don't let anybody tell you that debt is always bad. But at the same time, um, people that tell you that you're a sucker if you don't use debt or you're stupid if you don't leverage to the hilt, those are people that have a gambling mindset who've never experienced the kind of devastating losses that can occur if you go too deep in debt. So debt is something that has to be used very carefully. But I do trade on margin because I like margin because margin is basically access to capital. Access to capital is sometimes more important than actually having capital. If you gave me a choice and you said, Boyce, which would you rather have? $10 million right now or the ability to control Warren Buffett's money for 6 hours. I would rather be able to control Warren Buffett's money for 6 hours because I could make far more than $10 million in 6 hours with Warren Buffett's money. Or maybe it might take a day or something, but still, it would be far more than $10 million. The ability, so this is why I mentioned to you all, say it in the chat for me, please, because I have to keep repeating this to make sure we know this. What's the most important thing that a young person can have that's more important than a college degree? Somebody answer in the chat. I know some of y'all know. I know Errol knows the answer. What's the most important thing that you can give your children that will set them up for life? More important than a college degree, more important than a good job, more important than a nice car or a $20,000 prom. Right? It's a capital base. It's a capital base, and I need everybody to understand what a capital base is. A capital base is a collection of assets that you have that are available to you that allow you to generate the income you need to live your life. And because if everybody had a capital base, you wouldn't have to go to work every day. You wouldn't have to go get a job. The reason you have to get a job is because you don't have a capital base. Which means that you have to depend on someone who does have a capital base for you to get the income you need. So you have to ask them to help you because no one made a plan for you. And so what the Black Wealth Master Plan does is it positions everyone who cares enough about their future, their family, and their children to just exactly a direct path to building a capital base. So that when you drop that 22-year-old off in the game of life and they're out here in this economic struggle, they're not going out here butt naked. If they go out here butt naked with no, financially speaking, of course, if they go out here butt naked with no support and no capital base, they're going to have to beg a capitalist to pay their bills. They're going to have to sell themselves into slavery. And this is the biggest problem people have. The biggest stressor that Black people have is who they work for every day and having to get up and do something they don't want to do. That's not connected to your passion, that's eating up all your time, taking you away from your kids, make you do things you don't want to do. Even medical doctors are in a trap too. We think that, if I go and become a doctor or a lawyer, then that's going to liberate me in a certain way. Well, no. I mean, if you go to school for 12 or 13 years so you can make the income of a surgeon, which let's say that's $500,000 a year, a capital base will be better than that. If your parents saved up for you and got you 1,000 shares of Coinbase stock, you could sell options on Coinbase stock at the age of 21 and make more money than a surgeon. So, so what would that take to build the capital base? Well, 1,000 shares of Coinbase stock only costs about $240,000, and Robinhood will loan you half of that money. So you come up with 120 grand, which is far less than what a house would cost. You can make almost as much money as a surgeon without a college degree. So I'm telling you all, I don't think that I have not seen a single person anywhere say this. Like, when I started doing this stuff back in 2006, 2007, there are things I started saying back then that no one was saying then, and everyone's saying them now, talking about generational wealth and all that. Well, this is the thing I'm saying in 2024 that no one else is saying now, but everyone's going to be saying this by the year 2030 because I'm going to repeat it until I'm dead. The most important thing you can give your kids is a capital base. Not a degree, not a good job. None of those things are as good as having a capital base because when you have your own capital, you have your own life. You have literally bought yourself out of slavery and you can really get to the business of living. Donald Trump was 28 years old, not chasing corporate jobs. He was not paying off student loans. He was not struggling to pay for an apartment. He was 28 years old, purchasing a $400 million building. I don't like this man at all. I'm not putting him on a pedestal. I don't care what your politics are. But shit, when rich people are doing stuff on that level, when they're playing above the rim, I would encourage you to pay very close attention to how they got to that level. So get past your emotions. Get past this Democrat Republican nonsense. Figure out how they did it. Reverse engineer that. So capital base, capital base, capital base. There you go. I hope that sunk in. All right. And if you want to get started on that, I should give you, just to give you the resource, go to blackwealthmasterplan.com. It's free. It's the $5 a day plan. That'll help you build that capital base for your child. Blackwealthmasterplan.com. All right. So let's keep going. Okay. What are your thoughts on APLS? I got it when you mentioned it. Okay. APLS. Let's look at that stock. I think I still own it somewhere. APLS is Apellis Pharmaceuticals. Okay, it's had a rough month, 16% decline. I think it's a great company for long-term ownership. If you're trying to do an option strategy with it, it doesn't work so well for options, but I do like it as a long-term investment. And remember, when I pick the stocks on what Dr. Boyce is buying, these are stocks that are expected to do well. Like you got to hold them for a while. They're not, it's not like instant microwave food. It's the kind of stuff you got to leave in the crock pot for a while to really make it work. So some of these stocks may not show their strength for a year or 2 or 3. So don't buy a stock now and then try to see how it's doing 2 weeks later. That's not really how investing ends up working out. You make these investments long term. And by the way, if you want to take a look at the, I do the stock picks for what Dr. Boyce is buying. If you want to go take a look at some of that, I think you can go to drboycestocks.com, drboycestocks.com. So every week I research and curate a list of about 5 stocks that I like as long-term investments. So go to drboycestocks.com if you want to take a look at that. All right, so let's see. ASGG says, what do you recommend for beginners like me, single mother with 2 kids under 7? Blackwealthmasterplan.com. That's a great place to start. So there you go. That's the $5 a day plan. And anybody can do it, even if you don't have a high income. $5 can't even buy you a value meal at McDonald's, but they are coming out with the $5 value meal again, though. And the franchisees are complaining because they said we can't possibly sell our product for $5 because that's not enough profit margin. And so literally I set the $5 a day plan because I had a lot of people that I got tired of hearing their criticism. I call them the Negro naysayers. These are the people that create a problem for every solution. They don't know what they're talking about, and they'll sit down and argue with a PhD all day instead of hearing what I have to say. And a lot of these people have never taken a class in finance. They don't know. They're living in their mama's basement, and they'll say things like Black people can't afford to invest, and investing is only for rich people and white people and all this other stuff. And so to break that myth, I created the $5 a day plan. And I said, so if you think Black people can't afford to invest, I just asked, can Black people afford to buy chicken? And of course, the answer is yes, because we buy all the chicken. And so I said, okay. So because I said, look, if I took a Popeyes chicken restaurant and put it in the poorest, most depleted neighborhood in America, there would be a line out the door, around the corner, and down the block by that afternoon, full of people that shouldn't even be eating fried chicken, but they're going to go get it. So if we can afford chicken, then we can afford to invest. So I did $5 a day. And if you don't know, some of y'all know this, but repetition is important because I want this to become part of the culture. So basically, after 10 years of taking $5 a day or $35 a week, or you could do $150 a month, whatever pace you are comfortable with, you do that in the S&P 500 based on historical averages, you have roughly $29,000 liquid. That means you're not poor anymore. So after 1 decade, you're not poor. You're out of poverty in a decade. A decade is not very long. A lot of y'all been in bad relationships for a decade. There's a lot of things. I know people that have been thugging in the streets for a decade. I know people that did a decade in prison. People that have had horrible jobs for a decade. So a decade is not a long time to sacrifice. So you're out of poverty in a decade. After 20 years, you have $100,000 liquid, roughly, give or take a few thousand. After 30 years, you have close to $250,000. After 40 years, you have close to $750,000. So you do this for your child on the day that they're born. By the time they are 40 years old, you've broken every generational curse. You officially have a wealthy family because most families don't have hundreds of thousands of dollars liquid, right? So so once I created the $5 a day plan, those criticisms pretty much went away. There was nobody who would ever come into my face and tell me that Black people can't afford to invest because they know that I could easily shoot it down with that simple argument. And so what I've also done though is I challenge those of you that can do more than $5 a day or more than $150 a month to really, really push yourself. Like it doesn't make any sense to me if you're only investing $100 a month, but you're spending $500 a month on a car note. I'm not judging you for that. I'm not trying to make you feel bad, but I think you should judge yourself. I think you should say, dang, why would I give more money to the car than I give to the future of my own family, and still feel good about that. The reason that you do that is because you were trained to do that. That's what you were taught that Black people do. We're supposed to give more to other people than we give to ourselves. And I'm not telling you not to get the car. I want you to get if you want to get the Mercedes, get you a Benz. I want you looking nice when you're driving around the city, but I want you to handle your business first. So in my view, one perspective is if I'm a good parent, I'm not going to spend more money on the car dealer's kids than I invest in my own. So if I'm spending $600 a month on my Benz every month, I'm gonna put $600 a month in my stock portfolio every month. And that is not just my children's wealth, that's our family wealth. We are connected. We are connected. If I do for you, I'm doing for myself. That's an ecosystem. Stop thinking that it's either me or them. That's nonsense. That's very anti-family. It's very anti-wealth. It's very anti-community to say, well, if I take care of you, I'm not taking care of me. And that feeds into the crabs in the barrel competition that we see that ends up destroying us so much. If we are an ecosystem, then when I pass you the ball, I'm passing the ball back to myself. When I take care of you, I'm taking care of me. So when I'm putting this money in this account, it's not like I'm only doing this so that my children can do well 30 years from now and I'm going to be depleted and live a horrible life. No, that's your money. You're investing your money and your money becomes their money. Do you understand what I'm saying? Do y'all get what I'm saying? I need y'all to really meditate on this point. That wealth is a team sport. So when I'm helping the team, I'm helping myself. Stop thinking that if I help the team, I'm putting myself last and all that. You got all these people doing these stupid internet conversations. Well, I got to put me first, and I had to value me and know my worth because I. If there's a we, and I'm taking care of we, and I'm taking care of us, then I'm also taking care of me. You understand? Like it doesn't have to be one or the other. Stop thinking that way. If I take care of my wife and my kids, I'm taking care of Boyce too. Boyce ain't gonna be depleted. Boyce is gonna live good. So when you're building that wealth in the $5 a day plan, that is your money. I don't even think you should put it in the name of your kids until they are ready. That is your money. That is the family's money. And your job as the steward of the family's money and the family's wealth and the family's protection and the family's freedom, your job as the steward is you must protect the family legacy. That's your job. Like, okay, I have responsibility. It's like if we have a big corporation and let's say I'm the fifth Disney to be able to run the Disney Corporation, my job is to take this thing that's kind of mine, but really it's not totally mine. It's really ours. So while I'm in charge, it's like we're all in the same damn car and I'm the one who's driving. In a little while, my brother's going to drive. After a while, my kids are going to drive. But right now, when I'm driving the car, I got to make sure I don't crash the car. That's it. So it is your car, but it's not your car. But it's not your car, but it is. Do you understand? So you get to enjoy the car, even though it's not your car. Do you follow? Does that make sense? And I think that if we think about it that way as a group, then we get around all this selfish bullshit that you see all over the internet. Like if I get married, it's like, well, I can't do this, and I'm not gonna sacrifice that and all that. Everybody has to sacrifice, but everybody wins from everyone's sacrifices. We all sacrifice for each other. That's how you succeed as a team. The Chinese get that, by the way. The Chinese get that. I showed you all that video the other day of the little Chinese kids dribbling basketballs together where they had like 50 of them sharing the ball, and then they would dribble for a second, then they would move, and they would go to the next ball and the next one. And literally if one kid messes up, the whole thing falls apart. And what they're doing is they're training them to understand that we are a collective. We are one. Everybody has a job. Everybody does their job, and then the whole team wins. China wins. Not just you, but China. But then you win because China's winning, because you are one of us. Let me stop. I hope that helped. I didn't mean to go off on the tangent, but it's very important to understand these things. So invest for yourself. But just know that if you invest for yourself, you're taking care of your kids. When you take care of you, you're taking care of them because they are you. I hope that makes sense. Okay. Margaret says a link is not working. So I don't know what link Martha is referring to, or Margaret is. I said Martha. I'm sorry, Margaret. Can you talk to Margaret, Rianne? Because I'm not sure what link Margaret is referencing. So if there's a link that's not working, let me know. Or if you want to email support@theblackbusinessschool.com, they can help you with that because I'm not sure which link you're referencing. My apologies. Okay, so let's see. Eugene says, do you have Ethereum? Yes, I do. By small cap, do you mean small capital? These are smaller companies in the S&P 500 or even in the NASDAQ. These are just companies that have smaller valuations. And because there are so many big companies in America, it's crazy. Like small cap is like $1 billion in market value. You have like a $2 or $3 billion company, and they'll be like, oh yeah, that's a little small, tiny business. So this really reflects the racial disparity in access to capital. So when we have a company that grows to say 20 million or 50 million, it's a very big deal for us. But in the whole scope of things, in the white community, if a company is $100 million company, nobody cares, nobody pays attention. They look at that almost like a small business. So this is why conversations about things like reparations are so important, in my opinion. Can you repeat the stocks? I lost connection for a few minutes. Sure, Lawanda. The stocks that I mentioned earlier are MGNI. I can give you the tickers. MGNI. If somebody could type these into the chat, I'd appreciate it. MGNI. That's Mary, Garrett, Nancy, India. And then the second is RCKT, and that's Robert, Cat, Kitten, and Tiger. In case you're wondering why I don't remember the phonetic alphabet as much as I took a break from flying. I was doing my flying lessons up until about October and November last year, and then the convention kind of got me caught up, and I haven't flown since then. I feel kind of bad about it, but at some point I want to go back out there. All right, so let's see. Ricky says, Dr. Boyce, when selling options, if the option isn't used, the seller of the options makes money on the premium purchase from the option. Yeah. So Ricky, that question is more so for options class. So today I want to focus more so on stocks. If you want to see examples on kind of how to handle different situations, if you log in at drboyceprime.com, you'll see that I've done a ton of trainings on it, and you can take a look at some of those. And then also you can leave questions for me. And I'd rather kind of separate the two because I don't want to talk over anybody's head for those that don't understand how options work. So that's a little bit of a detailed sort of question, but I'd be more than happy to answer it during Prime class. Okay, so Jania says, to make sure I understand, P&G isn't good for options, so it's not necessary to move from a holding company to accumulate 100 shares of trade options. Yeah, I don't think P&G is great for options. It's a great long-term investment, but not so great for options, in my opinion. Donna Stroud, what is the recommended trading platform to use for someone new to options? We use Robinhood in class, but there's others out there. There's Tasty Trade. You can do stuff on Schwab and E-Trade, stuff like that too. Let's see. Is buying stocks and holding a good plan? Yes, it is a great plan. In fact, that is a plan everybody should follow 100%. Let's see. Are you still in development on the investment course for baby boomers? Gerald says, yes, we're actually almost done with an estate planning, legacy building training. And I mentioned to you all, we do money in the morning. And because some of you had specific questions about specific areas, I said, okay, well, let's create something. We created something called Money in a Minute. And Money in a Minute basically solves one problem that I was thinking about, is that sometimes when we want to go study something, it requires a lot of time and a lot of work. You got to sit down for 30 minutes or an hour. And sometimes that causes us to delay or even procrastinate on these things. So I said, okay, so in Money in a Minute, maybe what we can do is have something that you can sign up for at a reasonable cost that we'll text you the lesson out every day. So we'll give you like a 90-second bite-sized lesson on some concept related to that topic that will allow you to learn within the flow of your day. So Money in a Minute is what we're creating. And it happens that Money in a Minute, the acronym is Miami. So I think the URL is going to be something like drboycemiami.com, which is kind of cool, right? So yeah, so Money in a Minute, one of the first programs we're going to do options. And we're also going to do legacy building, estate planning. So this is more so for boomers, because boomers actually are part of the greatest wealth transfer in American history. They're passing trillions of dollars mostly to their wives. The men are giving it to their wives because women live longer than men. So this is going to be very empowering for women in that space, because women are going to just have a ton of money. So we got to be nice to the ladies. And then in a few years, the women will pass on and pass the wealth to their children. So the Gen Xers are going to be the richest in America in about probably a decade or so. But yeah, we'll be Gen Xers, because a lot of the boomers, I hate to say it, but time passes and you know what happens when time passes. But we love y'all. We want you here forever. All right, so Kuana says, if you had $5K to invest today, which stocks do you like best for trading options? Yeah, I like those stocks, Riot and Marathon. Yeah, those are good ones. Those are ones that I actually trade on myself. Chet, give us that name again, the risk management guy. His name is Renee Stultz, ReneStultz. Renee Stultz, Stulz. Feel free to look him up. Smart guy. Let's see. I sold call options on INSM. Now this jump. Do I have to wait until it expires? No, you don't have to. Well, you don't really have to do anything. You could wait till it expires, or you could buy the option back, but they're going to be very expensive to buy back. But that's only if you are under the assumption that the price is going to keep on going up. So it's up to you to decide how to respond to that. Let's see, Michael. If you sell 10,000 in stock options or 1,000 contracts with $10 stock, how do you buy puts to protect it? Is it put option contracts or put contracts? How many would you buy? If I have 1,000 contract or 1,000 shares, I would buy 1,000 puts. 1,000 contracts is actually 100,000 shares. So I think you mean 1,000 shares, which is 100 contracts. Or sorry, 10 contracts. Sorry about that. So 10 contracts is 100 shares because every contract is 100 shares. Sorry, let me say that again because I think I said it wrong. 10 contracts is 1,000 shares because each contract is 100 shares. So you have 10 of those, and that's what you would do with that. Kevin, is it a good or bad idea to buy a bond fund on a day when the stock market is going up? Can you explain why or why not? I think bond funds, stock, or really any kind of fund like that, I would think of it more longer term. I don't really, I mean, sure, if the prices drop that day, that it could be a buying opportunity. But if you're a long-term investor, 5 years from now, you won't remember what happened on May 28th, 2024. You won't care. You won't, because there's hundreds of other days, thousands of other days that will occur between now and then. So rather than reacting to what happened that day, I would just look at the fundamentals of whether or not you feel long term that this is a good investment for you. That should be, in my view, the driving method behind how you choose your stocks. If you want to take a look at something that may help you with this, we did a Black Stock Market weekend where we spent the whole weekend going through 11 steps to deciding if a stock should be in your portfolio. We actually branded it. It's called the Dr. Boyce Method. So if you go to the drboycemethod.com, you can get access to that training. It's yours for life. I think it's like $60 or $70 or something like that, but it's really, really good. So you can go to the drboycemethod.com. So feel free to take a look at that. Are there any REITs you would recommend? I think REITs from companies like Vanguard and BlackRock are pretty good. They tend to know what to do with money. So you can just search for REITs, and there's plenty in there that are really good. What do you think about SDGR? Okay, SDGR. Let me see here. SDGR. Schrodinger. Okay, I've never heard of this company. They engage in the provision of chemical simulation software solutions. Okay, for pharmaceutical companies. Let me see. I don't like it. It doesn't. It looks like the company's having some problems. And if you were a holder in this stock the last 5 years, you would have lost 15% of your money. There's nothing about it that really jumps out at me. So that's my opinion. But it's not a fact. Nobody knows what's going to happen in the future. Kevin, a couple of weeks ago, you shared a list of energy stocks. Is that info still available? It should be. If you go to what Dr. Boyce is buying, or if you go to drboycestocks.com, you can get access to any list that I've ever released. If I sent it out as a special release for that week or something, that's hard to go get. But if you're on the text list, you'll get stuff from me. So make sure you're on the text list. You can text the word. Another word you can text is the word stock to 87948, and I'll send you a bunch of stuff that way. So feel free to text stock to 87948. The thing I would warn you about, though, is if you get on multiple lists, you'll get a lot of messages from me because we send out a lot of information from the Black Business School. So if you don't mind me being in your inbox every day, then feel free to do that. But if you don't like it, then if you just stop responding or stop clicking the links, it'll take you off the list, okay, eventually. So I don't want to bother anybody, but I have a lot of stuff that is happening and a lot of things that we'd like to do to help you. So in case you want to know how we run the Black Business School, is we believe everything is an ecosystem. So within this ecosystem, our belief is that if we show you value and we give you lots of support, lots of free stuff, that when we come along and we have something that does have a fee attached, you'll consider supporting us the way we support other businesses, the way we support white-owned companies and we buy things from them. We have to make money. We have a team, we have to pay. We are an independent entity. We're not like an HBCU that gets money from the government because we don't want money from the government. We don't get a bunch of corporate sponsors. We're not looking for that. We don't want that. We want We have to maintain our independence, and freedom is not free. So I hope that you'll understand that when we mention something that we're doing in the school and we say that there is a fee attached. And I hope you'll compare it to what you would have to pay if you were at a university and signing up for a class, or the amount of money that we spent going to college and getting absolutely nothing of any value. Everything that we offer you gives you value. And if you don't feel like it gives you value, then we don't want your money. And in fact, we'll give you your money back. If you do something and you're like, gosh, this isn't helping me, then no, that's not the deal. But if we're giving you value and you feel that participating in what we're doing is making your life better, then we hope that you'll also, say, okay, they supported me, they helped me level up. We're going to help them level up. And this is how you build strong institutions. If you look at, say, the Anti-Defamation League in the Jewish community, they go to the community. They say, give us money because we need money in order to build this institution that's here for everybody, right? So that's why we have to ask for money. And it's a little weird, it's awkward because there's one guy on Twitter who said, why are you always trying to sell something? And I was like, I'm not trying to sell stuff. I'm offering things. And some things I offer are free. Some things I offer have a fee. You don't have to pick any of that. But if you see the value, then why not invest in things that are actually going to help you? And also, one thing that we do really well is we're really good at educating your children. And in our Black Business School for Children, it's called Black Millionaires of Tomorrow. Our kids, when they go through our program, they have a financial literacy level that is higher than the average college educated adult. This is how good we are at what we do. And so if you want to take a look at that for your kids, you can get started at blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. So what we just ask people is we say, look, we don't need you. We don't want anything that we don't earn and we don't deserve. Or we're willing to prove our worth before we ask for anything. But at the same time, we just want you to support us as much as you supported that big white university that took $100,000 out of your family's pocket. Support us 1/10 as much as you support them. Because I know that those people at the University of Iowa didn't care anything about your family. They don't care anything about your community. A lot of them didn't even want you on the campus, but yet you gave them $100,000. Well, why not support a Black-owned institution that really does care about what happens in this community? And we have the track record to prove it. So there we go. There's my little spin on what the Black Business School believes and why we exist. So I hope that helps and it makes sense for you. All right, so let's see here. Next question is, how do you determine the percentage on the trailing stop order? There's no rule with that. It's just a matter of feel. So I picked 10% just because it felt right. But if it hadn't felt right, I would have picked 5% or 15%. So I would say, feelings are a big part of investing. We talk a lot about investing with emotions and stuff like that. And it's okay to have your emotions work in your favor. As long as your emotions help you, then it's okay. Right. So, when we talk about risk management, I always tell the students in the Prime program, ask yourself, what am I afraid of? Am I afraid that the stock is going to take off on me? Then you can hedge against that. Am I afraid the stock is going to collapse on me? Well, you can hedge against that too. So the question is, ask yourself, what are you afraid of? And that's how you can figure out what the right move is. Jennifer, do you think it would be wise for a beginner to buy stocks and write options using margin? It could be wise to learn, but I would be really careful. I'd be extremely conservative about the approach. And I do a few one-on-ones if you ever wanted to schedule something like that. If you email the support team, support@theblackbusinessschool.com, we could do that. Or also we have small group sessions. And in addition to that, I did create my first mastermind. I think we're almost filled up though, but it's more so for those that are more advanced. They have a little more of a capital base. And so if you want to take a look at any of those things, just email support@theblackbusinessschool.com. Okay, a couple more questions, and then we're going to bounce out for today. When selling options, is it better your shares are called or the contract expires without execution? You know what, Lawanda, it's not so much about one thing being better than the other. Typically, if you're selling out of the money call options, if the price goes up, that's better for you. That's better for everybody. You just may not get all the money, but it's better than if the stock collapses on you. But the benefit obviously is that if the stock doesn't hit the strike price, then you can sell that same contract and keep generating that income every week without making any adjustments. So there's a win no matter what. And the thing about investing, in my opinion, is the goal in becoming a good investor is not so much just sort of knowing how to win all the time. It's sort of knowing how to find the bright side of any situation. If the market goes up, that's a bright side. The stuff you own is doing really well. the market goes down, that's a bright side. You can buy stuff really, really cheap. So, and then also sort of knowing how to manage your risk so that when things happen, you're not going to get surprised or broadsided. It's so knowing investing is about knowing what you're getting into, not being able to predict everything, because that's pretty much impossible. It's just sort of knowing what you're getting into and knowing how you want to be positioned based on what you think personally is going to happen. Let's see, how do I feel about LVMH, Moet Hennessy? That company is owned by Bernard Arnault, who I believe is the richest man on earth. And Bernard Arnault, he does exactly what we talk about in the Black Business School. He has all of his kids that they're all going to run his company. Like, it's funny, you got LVMH, the Moet Hennessy company, where all these Black people love it. Rappers rap about it. And what they're doing is they're sitting around constantly plotting and planning for the next generation. And why can't I find it? Why doesn't it pop up in Robinhood? Let me see here. Maybe I don't know. That's kind of strange. Let me see. It's on the NASDAQ. Okay. So let me see here. I like the company as a good long-term investment. And if you had it over the last 5 years, you would have made a return of 114%. So your money basically would have doubled. So in that regard, I like the company as a long-term investment. Now, if you talk about, let's talk about LVMH and Bernard Arnault. And let me do some quick research on this, because I think it's really interesting how he runs his family. And I really encourage those of you that are generational wealth builders to really kind of understand this. Hold on. Because he has his kids running parts of his business. And he meets his kids. He has a monthly meeting with them, and they all sit around and he talks about different parts of the business. So he understands his role as a wealth builder and a generational wealth builder to be the teacher of his own children. He teaches them, how to run the company and how to do things. So let me tell you about some of his kids. So he has a kid named Delphine, or a daughter. She runs Christian Dior. And so she has a lot of experience. He meets with all these kids every single month to make sure that they're ready. His other son, Antoine, runs communication and environmental issues for LVMH. Like, he's also the CEO of Berluti, one of his brands. Alexandra she now has a big role at Tiffany. Frederic is the CEO of Tag Heuer, Tagheuer, which is their watch division. And then there's Jean Arnault, who oversees marketing and product development for Louis Vuitton's watch division. So what he did was he sent his kids to business school and all that, I believe. But once they came home, he said, I don't need you out here serving other people. I need you serving the family business. And he did what the Rothschilds did. I talked to you all about the Rothschild family. And the biggest thing the Rothschild family did was they taught their children how to operate on a code of conduct. He taught them what was important. He said, this family is what matters. This name is what matters. This is what you protect. This is what you defend. This is where you bring your best energy and your best resources. Now, I want you to compare that to the Black community. Most of us, unfortunately, are trained to say, go to school and then you can get a good job and then you can go represent a white guy. That's it. That's what we do. We all go find separate white people to go work for. And it sounds I don't know if it sounds racist to people when I say it, or radical, but that's what happens. There's not even a conversation about, like, okay, how can we pour into this family as much as we're pouring into everybody else? So when you're pouring into everybody else and you're not pouring into yourself, why would you be surprised when your wealth is depleted? Your best and brightest, your best resources, your best everything, go somewhere else. The minute you get a Jackie Robinson, you sell him to the major leagues. But the right mindset is that when you get a Jackie Robinson, you hold on to him for dear life. You fight for control of that asset. You don't give it away. You don't sell it as soon as it has a certain value. You maintain ownership. That's what you do. That's what the Negro League should have done. They should have said, no, we won't sell this guy for $1 billion. This is the tentpole for this league and future growth of this league. If you want to do business with us or with Jackie, you're going to have to deal with us as an independent entity Maybe we arrange games. We'll go play the Dodgers and the Dodgers can come play us. You share your audience with us. We share our audience with you. We do a partnership. We're not going to do an acquisition, because when you do an acquisition over a partnership, what you're doing, if you're the Negro Leagues, is you're selling not just the assets in your possession, you're selling the rights to those assets. You're selling all your options too. Just like if I have a little, if I see, and it's about vision. This is why we do economic consciousness training. I have to keep reminding this so you'll understand why the class has such a weird name. There's no other economic or financial consciousness class I've ever seen anywhere, but it's important because your consciousness, your vision determines how you make economic decisions. So if I look at a 7-year-old girl and all I see is a 7-year-old girl, then I don't have any vision. If I have vision, then I see what that 7-year-old girl is going to be when she's 17, 27, 37 to 40. I see this child and what they're going to be when they become a parent, when they become a grandparent, and they have, 70 great grandkids or something, or 30 or whatever, right? That's what you should be able to see. You should see everything that something's going to become, not just what it is. Because if people saw the Negro Leagues and could see in a crystal ball of what the Negro Leagues would be in the year 2024, if they continue to maintain ownership and invest in it, there's no way they would have sold their Jackie Robinson. There's no way they would have let that go. There's no way. I think we let go of things when we cannot see the value. And that's where consciousness comes into play, because consciousness requires you to really be able to use your imagination and see things that don't exist yet, see potential. Do you follow me? Does that make sense? I hope that makes sense. So I like the story. I like Bernard Arnault. I like the way he runs his family. I like the way he understands the importance of investing in the future of the family name. I like the fact that even though he's worth over $200 billion, it seems to me like he can see what his company is going to look like 100 years from today. He sees what his grandkids and great grandkids are going to be able to contribute. And that company is going to be $1 trillion company in about probably a couple decades, maybe less. No, not $1 trillion company. I'm sorry. His family wealth will be over $1 trillion. I bet his company is probably close to $1 trillion already. So just have some vision, man. If you have no vision, then all you see is what's in front of you. And if I look at the Black community, and if all I can see in the Black community is what I see right now, just all the chaos and brokenness and everything else, then I'm going to get depressed and I'm going to give up. The thing that gets me up every morning is because I'm not seeing what everybody else sees. I am a legit crazy person because I see things that are not there. The reason I get up every morning is because I see what B1 people are going to be when our grandkids are running things and they're living off of and they're building off the foundation that we're setting for them today. That's what I see. I don't see this shit. I don't even look at it. It's an abomination sometimes. It's an embarrassment. It's not worthy of who we are meant to be, in my opinion. So let me keep going. All right, Sybil. Dr. B, is it okay to just buy stocks and hold them instead of selling options? Absolutely, 100%. Yes. So don't feel like options are a requirement. Options are just an extra. It's like adding spice to your food. Like, just because you get chicken or whatever, you don't have to put seasoning on it. You could just eat the food without the salt or without the pepper or whatever, right? So options are a type of seasoning that just adds a little spice, but it's perfectly okay to eat the hot dog without the ketchup or whatever analogy you want to use. Should we hold or sell Uber amidst the lawsuits? Asked Stephanie. I don't have an opinion one way or the other. I think Uber is just such a fascinating company because they've been able to lose money at an insane rate for a very long time and stay in business. This is, again, another type of white privilege people don't talk about. And it comes down to access to capital, because if it wasn't for the bank, Uber would be dead. Uber would not even be a thing if they didn't have the ability to access money like they can. Let's see, a couple more questions. Then I just got a note from one of my team members that I do have a meeting in 3 minutes. What should a 15 and 16-year-old do with their $1,000 check? Mutual funds, I think, will be fun, or maybe buy shares of some great American companies. Maybe make it fun, make it educational. So ask them to pick some of their favorite brands and own shares of those brands and explain what that means. I taught my 16-year-old daughter's best friend how to invest in 5 minutes. And I said, okay, let me show you on my phone. And I said, what's a company that you like? She said, Chipotle. I said, okay, well, let me show you this. Here's Here's the share price. Here's how you buy. I punch buy, and I said, let's buy shares of Chipotle. And I bought it, and I said, okay, the order just went through. So now our family owns a percentage of Chipotle. And I got the best reaction. She said, whoa, that was so cool. And I loved hearing that. That made me feel good because, when you get old, you be trying to be cool. And it never works. We always look old. And so to be cool, like to be the cool dad was kind of fun for me. So the point is to say that when you teach these things to your kids, make it part of the flow of just your regular life. So you're in line at the drive-thru at Starbucks, impress your kids and show them how you can buy ownership in Starbucks while you're in the drive-thru line. They're never going to forget that. I didn't see this type of stuff when I was 16, and when you show them that and then tell them a few of the things that I've shared with you, this is not light stuff. Like the stuff I'm breaking down for you and we're talking about every day. This is really cutting edge stuff. You're not going to learn this in college. So give it to your kids and they won't forget it. Everybody wants money. Everybody needs money. And if they don't need it now, they're going to need it at some point. And so they're going to remember the things that you tell them. So remember, I don't teach any students. I refuse to teach any students. I will only teach you if you agree to be a teacher. I will teach teachers. That's it. Because we have to multiply the knowledge base because we got so much working against us, so many people that want to keep us in the dark. We got to give everything we've got to fight against that. All right, so let's see here. Let's see. Renee says, thank you for all that you do. When's the next prime class? We did a prime class on Sunday, or was it Saturday? Or I think it was Sunday. Yeah. Sunday, we just did one. I don't know the dates. If you go to drboyceprime.com and log in, the dates are in there. I don't have the dates in front of me. My apologies for that. I want to say maybe around the 6th or something like that. And we're also going to do another Prime 101. We do a Prime 101 about once every 6 weeks for those that are beginners, or maybe you're trying to figure out how to make that first move. And so if you're a Prime member, Prime 101 is free. If you're not a Prime member, there is a small fee, but it's worth it. You'll 10x the amount that you invested to learn the process. So if you want to get an introduction to what we do in Prime, pull out your phone, text the word money to the number 87948, and I guarantee you that presentation will blow your mind. You're going to love it. And it's going to rock your whole world. And you're going to, it's just, I just know these things, some things I do know. I don't know everything, but some things I know. All right. So let's see. Jania, or is that Jinja? I think it's Jania. Okay. What Dr. Boyce is buying, shares stocks to hold for long-term, not buy, sell options. Yeah. What Dr. Boyce is buying, those are long-term investments, at least 3 years or more. The Dr. Boyce Money Makers, that's in the Prime program, that's specifically for options. So if you think about it, it's almost like how, remember when you would date when you were younger and you had the times where you would date somebody that you thought might be your husband or your wife, or maybe you had somebody else that wasn't going to be your husband or your wife. I'm not here to judge, but maybe you saw somebody you're like, you will be a great one-night stand, or you will be a great person for me to date until I meet my spouse, right? I'm not saying you should do that. It's bad, right? Kind of bad, right? But as long as you kind of communicate that, right? Don't make any promises you don't want to keep, but you'll know what it is, right? There's some people that you're going to be attracted to for a while, but you're still like, no, he's not daddy husband material, but he's, he looks good, or she's pretty, or whatever, right? So same thing is true with stocks. My option stocks, those are my exciting money makers. Those are the ones where I can sell the options and get that cash flow and use the cash to do all kinds of stuff. It's very cool, but those are not always my long-term investments. My long-term stocks are a little more boring, but they have sustainability. They're not going to give me the same volatility. And so really, when I form a relationship with a stock, that's what I do. I categorize it. I put it in different categories based on what that stock can do, because every investment can be valuable for somebody based on what they're seeking to accomplish. You see what I mean? So this is where your preferences come into play, your risk tolerance, things like that. All right, so I'm gonna have to go. I know there's a couple more questions. I'm sorry I can't answer them all, but I promised someone that I'd do something at this time, so I'm gonna have to get on out of here. If you're not on the text list, make sure you get on the text list. Text the word morning to 87948, and you'll get an invitation for financial consciousness training tomorrow. So the number is 87948. You can text the word morning. Also, if you want to take a look at what Dr. Boyce is buying, you can go to drboycestocks.com and you can take a look at that and see if that's something that works for you. Last but not least, if the options thing is of interest to you, you can go to drboyceprime.com and see what we do in the Prime program. I think you're going to like it a lot. So anyway, have a good day, everybody. God bless you, and I will see you all tomorrow morning.